What's going on, everyone? We're going to take a technical analysis look intraday at Tesla. Today is the 12th of October, currently sitting at around 10:30 a.m. Pacific Standard Time. My name is D. Anthony with evolutiontraders.com, full-time options day trader. What we are looking at here is the 1 hour time frame, and why I'm so keen on looking at the 1 hour time frame is it gives us a big body of work intraday, right? We can really kind of avoid the choppiness action. Today has been a little bit of a slower day, a little bit of a more choppier day. We had an initial kind of pullback sell-off at the start of the open, followed by a little bit of a recovery, followed by the past 2 hours just kind of chopping around, right? So what we're looking at here is the 20-day moving average on the 1 hour time frame. You can see 2 hours ago at 8 a.m. Pacific Standard Time, we kind of ran our heads straight into this 20-day moving average, got rejected, came back down and fell below the 10-day moving average, and now kind of just trickling back down. So this range here is starting to get extremely tight. We are trapped between the 5 and the 10-day moving average. What I would be looking for experienced scalpers and day traders only, any bit of loss through that 5-day moving average is going to have an initial room to run. So from 214.89 down to a price of around 213.75 for scalpers, get in, get your cash flow, and get out. If you're looking for the bigger move and the bigger continuation, what you're going to want to see is some sort of dramatic sell-off, right? So we know that we have Fomc. We know that there's going to be a little bit of news driven around that. It's going to spark some momentum either to the upside or to the downside. We have a lower Bollinger Band sitting at around 212.10. Our line in the sand is 211.51. Okay, so 211.51 is the pre-market first hour's lows. If we do start to take out and build below that price of around 211.50, I would look to take a macro short position on Tesla. Now, again, this is 4 points down. So what do we do between now sitting at a price of 215 to a price of 211? Is there a trade here? Is there a potential to try to make some money? The first answer is going to be to the long side. If we do get some sort of push up off the FOMC kind of meeting notes here, and we start to take out this supply of the 10-day moving average and the 20-day moving average, what I'm looking at here is these two channels, okay? I'm looking at the first hour's highs along with this 8 a.m. candle's highs rejection here at the 20-day moving average. What I'm looking at is a price of 217.62. This is going to be my long entry to get long. 217.62, 217.70 over this 20-day moving average is going to have initial room to 219. Which is also going to correlate with the pre-market highs. I'm just trying to get in here. I'm trying to make a quick buck, and I'm trying to get out. We do have a linear regression channel line here. This is going to act as a very firm level of supply. Now, to the downside, anything below this 5-day moving average here, 214.94, 215, we're going to have initial room down to around 213 and a half, 214. So you got about $1 room down to the downside. Any runners that are held, next profit taking area is going to be 213 even, and then obviously over that 20-day moving average. So we have a potential to trade this both sides, but we have to be patient. As of right now, I would not start a position or try to jump in something or time the market or guess the market. The last thing you want to do is guess. Either we need to lose the 5-day moving average to go short, or we need to reclaim the 20-day moving average on a 1 hour time frame to go long. If you follow that set of rules and stay disciplined, you should be able to make some money off of that. Again, don't take my word for it. You obviously have to manage your own risk. You have to do your own due diligence, do your own technical analysis, but that's just how I'm going to play it. Over the 20, I'm going long. Below the 5, I'm going short, and obviously holding a runner to that lower Bollinger Band, and anything below the lower Bollinger Band, below 211 into tomorrow or Friday, can get hit and get hit very, very aggressively. So those are the levels that I'm going to be following. Again, my name is D. Anthony with evolutiontraders.com. All of my information, if you guys want to trade with me in the community, it's all linked down below in the description box, and I will see you guys all on the next video.